Viewers, good afternoon. This is PK Shikdar on behalf of PK Shikdar Advanced Learning. Now I am going to take the topic joint and byproduct, that is in process costing. Now let us start with joint products. Two or more products of equal importance produced simultaneously from the same process, with each having a significant relative sale value, are known as joint products. For example, in the oil industry, gasoline, fuel oil, lubricants, paraffin, coal tar, and kerosene are all produced from crude petroleum. These are known as joint products. Now, at this juncture, you may be interested in knowing what is called co-products. Now, I am going to take into consideration the co-products, two or more products, which are contemporary but do not emerge necessarily from the same raw material in the same process. For instance, wheat and grain produced in two separate farms with separate processing of cultivation are the co-products. Similarly, timber boards made from different trees are co-products. Now, it is a time to know what is called byproduct. Products recovered from material discarded in a main process or from the production of some major products. Examples of byproducts are molasses in the manufacture of sugar, tar, ammonia, and benzol obtained on carbonization of coal, and glycerin obtained in the manufacture of soap. Now comes the commonly used methods for apportioning total process costs up to the point of separation over the joint products are as follows. Number one, physical unit method. This method is based on the assumption that the joint products are capable of being measured in the same units. Accordingly, joint costs here are apportioned on the basis of some physical basis such as weight or measure expressed in gallons, tons, etc. Now, second is average unit cost method. Under this method, total process cost up to the point of separation is divided by total units of joint products produced. On division, average cost per unit of production is obtained. Hence, average unit cost is equal to total process cost up to the point of separation divided by total units of joint product produced. Third is survey method. This method is also known as point value method. It is based on technical survey of all the factors involved in the production and distribution of products. Now, this is not much relevant so far the examination point of view is concerned. Next comes contribution margin method. According to this method, joint costs are segregated into two parts, variable and fixed. The variable costs are apportioned over the joint products on the basis of units produced. That is called average method or physical quantities. In case the products are further processed after the point of separation, then all variable costs incurred be added to the variable cost determined earlier. In this way, total variable cost is arrived, which is deducted from their respective sales value to ascertain their contribution. The fixed costs are then apportioned over the joint products on the basis of the contribution ratios. We are coming to the most important method of apportioning the total process cost up to the point of separation on the basis of market value method. This is the most popular and convenient method because it makes use of a realistic basis for apportioning joint costs. In other words, the products are made to bear a proportion of the joint cost on the basis of their ability to absorb the same concept. And market value means weighted market value, that is units produced into market price of a unit of joint product. Now under market value method, we are having number one, market value at the point of separation. This method is used for the apportionment of joint costs to joint products up to the split up point. Remember, split up point is also termed as point of separation, or at the point where products are actually being segregated. Say A, B, C may be joint products and D may be the byproduct. It is difficult to apply this method if the market value of the products at the point of separation is not available. It is a useful method where further processing costs are incurred disproportionately. To determine the apportionment of joint cost over joint products, a factor known as multiplying factor is determined. This multiplying factor on multiplication with the sales value of each joint product gives rise to the proportion of joint costs. Under this, the second concept is market value after processing. Here, the basis of apportionment of joint cost is the total sale value of finished products. And under market value, the third method is known as net realizable value, and this method is usually asked in the examination problem. Here, from the sales value of the joint product at finished stage, the following are deducted. First one is estimated profit margins. Second one is selling and distribution expenses, if any. And third one is post split off costs or further processing cost. Now I am coming to the treatment of byproduct in cost accounts. Number one, when they are of small total value. When the byproducts are of small total value, the amount realized from their sale may be dealt in any one of the following two ways. That is, number one, the sales value of the byproducts may be credited to the costing profit and loss account and no credit be given in the cost accounts. The credit to the costing profit and loss account here is treated either as miscellaneous income or as additional sales revenue. And number two, the sale proceeds of the byproduct will be treated as deductions from the total cost. The sale proceeds, in fact, should be deducted either from the production cost or from the cost of sales. And secondly, when the byproducts are of considerable total value, that is where byproducts are of considerable total value, they may be regarded as joint products rather than as byproducts. To determine exact cost of byproducts, the costs incurred up to the point of separation should be apportioned over byproducts and joint products by using a logical basis. In this case, the joint cost may be divided over joint products and byproducts by using relative market values, physical output method at the point of split off, or ultimate selling prices if sold. And we are coming to our last category where they require further processing. In this case, the net realizable value of the byproduct at the split off point may be arrived at by subtracting the further processing cost from the realizable value of byproducts. And if total sales value of byproducts at split off point is small, it may be treated as per the other income method, that is to be credited to the costing PL account. If the amount realized from the sale of byproduct will be considerable, it may be treated as I have said when the product are of considerable total value in the same way. Now, in the context of decision making, whether a particular product should be processed further or not, in that case, we are required to consider what is the incremental sales value of a particular product. Here, incremental sales value means sales value after further processing minus sales value at the split up point. And with this, we are going to compare incremental cost, that is further processing cost of the product is concerned. If incremental sales value is more than the incremental cost of further processing, then that particular product should be processed further, or otherwise it should be sold at the split off point. Thank you. That is all about joint and byproducts. Thank you.